Yo, what is good YouTube? Welcome back to the channel. What I want to do today, I know I've not done the video in quite a long time, so what I'm going to do is I'm going to go over a little insight to order flow. There's a lot of people that try and teach it on here and they don't fully understand what it actually is, so what I'm going to do is I'm going to run through how to get a buys using order flow and how to actually enter using order flow. Okay, so I'm on TradingView, but this is not showing real order flow. Okay, you need an actual chart like Quant Tower or whatever to actually see the real order flow, but you can still use it. What happens is this kind of these kind of profiles use tick volume instead of actual volume traded. Okay, so it does still work, but you're better to use something like Quant Tower if you want the actual real volume. Alright, so what you see marked out here is the volume profile. Okay, what I'm mostly only showing here is the value area. Okay, that's where 70% of the volume was traded within that day. Okay, each volume profile indicates one day, and within that you have got 70% marked out. You can just see the outside of it, which is the full volume profile, but I've kind of dimmed it a bit, just because there's no need to have it on there. I just use the value area to find out where the money's going. Okay, so let's jump into it. If the value area in POC each day is going lower, what are we seeing? We are simply seeing that money is going lower and our bias is bearish. It's as simple as that. All we need to do to trade that is simply follow it, literally. So as price is coming up here, we can see values going higher. We then consolidate here and then we drop. Okay, so on this day here, if we look back 2 days, what you want to do is you can see the previous days were going lower. Okay, so on this day that we are looking to trade, what do we want to see? We want to see the value area hold, so we want to see entries within here. Okay, so we broke out the previous day's value area, and then when we trade into this new day, we trade back into the previous day's value area, and we can then be looking for our entries within here. Alright, if we break too far away from the value area, we can also look for us to just trade outside value on the current day. Okay, so if we're looking at a premium and discount, what you would see in ICT kind of method is you would draw the 50% of your range. Okay, but how actual real volume is traded, how banks and institutions trade, is they trade in outside the value area. Okay, so when you're outside the value area, you're in a premium if you're looking to short, and if you're looking to buy, you're in a discount. It's as simple as that. So you want the previous day's value area to hold, and or if we're too far away, so say we open and we are down here, all we want to do is come into discount of the current day. Okay, so let's just run through a couple of examples just how the market is actually moving. So we'll just start from down here. Again, we come down, we're in a balanced range, and then this is the first sign here that price is wanting to then go higher. Okay, money is moving higher, the value, people are accepting that price is getting accepted higher. Okay, so once we see this, we probably wouldn't be looking to trade this day. Okay, it would be this day, and then what happens? We want to see price return into the previous day's value or outside the current day value. Again, we don't tap into it, but we come outside value on the day. We then trade lower, and then we can look for a long in here. Okay, let's go on to the next day. Next day, we draw our value box. Price is again moving higher, so we're only looking for long positions. Okay, what happens? Price comes outside the value, and then we return back into value. We can look for a long position to then go long. Okay, we get a nice big move on this day. If you watch my footprint videos, you'll see how I enter the market. Again, when we're coming into the new day, which is here. What happens? Price, all it does is return back into the previous day's value, and then we get another move. Okay. On this day, I'm not going to lie, you'd still be looking for a long, unless on a higher time frame you hit a point of interest. You're still going to be looking for a long here. Okay, so this could be a loss. It probably is a loss, because what you're looking for is price to return back into previous day's value, and then you'd look for a long. Okay, so you could say this would be a losing day. Then what happens? We get our first instinct that price is now, after we've had a consolidation, we're starting to now drop lower. The value is getting accepted lower. Okay, so on this day we're looking to trade. what happens? Price just stays inside the value area. So if I was to, because this isn't how the value area would look, because this is after the day, okay, but if I was to rewind it to the London session or New York session, look how this is going to look. So this is how the value area is going to be looking. We then trade outside value on the current day, amber inside the previous day's value. We can look to short here. Alright, then let's skip to the next day. Price is going lower, so we're still looking for sell. This is going to be a new week. Just going to go dead slow here. But what are we looking for here? Okay, we're looking for, I went a bit fast, but we're going to look for a return into Friday's value area, and or we can then come outside the current day's value. So this is a premium market that we can then look to short. Okay, we use the VWAP on the day as well, so that's the volume weighted average price. So a lot of people think if we're above VWAP we buy it. No, that's not how banks and institutions trade. You think a bank is going to want to get, let's take an example. A bank goes in on Monday morning and they get told, we need to fill 1,000 contracts short. Okay, you think they're going to fill the contract shorts below the VWAP? No, that's not how it's going to happen. They're going to want to fill these orders within a premium market. Okay, so above the current acceptance, and for a VWAP, when you're above it, you're in a premium. When you're below it, you're in a discount. It's as simple as that. We aren't using ranges and using the 50% like ICT says. That's not how markets work. Okay, a premium and discount is basically above acceptance, so outside the value area and above the VWAP would be looking to short. Okay, so if we got a confirmation on the footprint here, we could short it, but I do see these two highs here that we might run first before we drop lower. So again, there we go, we melt lower. Okay, so that could have been an entry if the footprint provided it to continue the market lower. It's as simple as that. This is such a powerful thing that I'm teaching. I was never ever going to share it. It was going to be for my private clients, but what I want to do is just kind of give people that are struggling in order flow a bit of a chance to understand it. Alright, so again, you just see the massive jump. Why? Because we are in a premium market. We were outside the value. Again, it's obviously updated now, so the volume profile is changed, but we're in a premium market here. Okay, because at the time the volume profile was like this, so we came outside value and then we melt lower. Okay, let's go into the next day. We're still looking for shorts. Why? Money is going lower, price is getting accepted lower. Let's see if we can do one more day. Okay, so price is lower this day. What happens? We're opening up inside the current value. Okay, when we open up inside the current value, you either want its price to trade outside of value of the previous day and the current day, so it would be up here. So we would want to see price trade into a premium market, or we can then just trade outside the current day's value area. So we'll skip Asia session, of course. We want to be by selling above the VWAP as well. Okay, so we're above it now. We'd see if footprint gives an entry here, but again we've got these highs here that I think will get taken out. Let's see, and again price just melts lower. Okay, so yes, liquidity matters, alright, but it doesn't really the way ICT says it. ICT would say these highs need to go before we get a liquidity suit to go lower. No. Banks don't care about that. They just want to fill their orders. They get told how many orders they need to position within the day, and that's how they're getting into the positions. Okay, they're doing it in a premium above the VWAP and outside of the current value area. So when we come to the London session, the value area is looking like this. Okay, so price is failing to accept prices higher. and if we got an entry within the footprint here, we could then short that down. We're also on a premium above VWAP. Okay, that is how the market moves. Let's just go back and we'll just go over continue. That was here. Next day we'd be looking to short again because we closed the value area down here, but again this day what happens is, well, this is a trade that I actually took, and I'll tell you exactly what happens. Price opens and we start trading higher. We're outside the previous day's value area, but we're still looking to short because our target is down here. So if I jump onto the daily time frame, this is my target. These equal lows, including on the 4 hour. So look at these lows. This was where I was targeting, where I wanted to see price go to. Okay, so on the day here, this is a very good trade for me, and all I did was marked out these highs. Okay, why? Because it's the previous day high. So there's going to be money sitting up here, and what happens? Price consolidates basically throughout the full day, and then we get the spike up outside value. At the time, this was actually outside value as well. There we go. So that's the value area. New York session opens, we spike higher. We've got a perfect entry in this wick, and we trade it down to the low. Okay. So that is all we're going to be doing with value areas. That is how you get a bias. It's the easiest way to get bias, and I use it every single day. That's what I use to get my bias. Okay, we had this massive drop down. Money's going lower again. So what could you look to do here? You can look to short, where inside as I return to the value area. Return to the value area, and then outside the current day's value, which if we, again that was Asia, we're not looking to trade Asia. So what happens? This is the value area. Price comes up outside value into the previous day's value area. We then look to short. We're also above VWAP. We can short the market. Okay, but again today we're not trading because price can just trade back higher now. It's hit the weekly target, so I'm not 100% sure where the market's going to go. But again, if you did just use it, if you were long after we've hit the target, what you're looking at is price to take out the value area low and get our entry. Simply just take it back up. You can either target the value area high or the previous day's value area high. Simple as that. That's exactly how I use Orderflow. Let's show you on natural gas as well. Exact same method. Okay, we open the day here. What happens? These 2 days, value is moving higher. So what can we expect on this day? We can expect value to push price higher. What happens? We open up inside value, okay, of the previous day. We start trading lower. Where do we trade to? We trade to the outside the value of the previous day, and then we look to trade higher. I didn't take this trade because I didn't like how the consolidation happened here. But nevertheless, you could have got an entry if you wanted to take it down there. Following on, next day, we're looking at the days, we're going higher. We can still look to buy on this day. What happens? We return back into value. Trade back into value. You could take a long in here, you could have took a long here, or you could have took a long down here. Okay. And if you look, current day's value, we wait for price to come outside the value area. Discount level would also be below the VWAP. Take the low. Then again today, this is a bit of a tricky one, but I'm looking to short. Okay, why? It's Friday, and I think down here, this low outside value area down here is where price is going to come to before we start trading up to these highs. There's a lot of liquidity resting up here, and there's also a weekly gap, which I think price is going to push up to. But today, I would like to see price come short, take out the London low, previous day's low, and then take out this low here. So I am actually short. Let's go over why. Price comes up to the area, and then we've started consolidating. Okay, what we're going to do is we're going to mark out our value area, which is outside value area, which is up here, where my entry is currently, and we're above the VWAP. Okay, so premium level. We don't need price to come up here. We don't need price to come up here. Why? Because we're outside the value of this day, and when we're inside the previous day's value. Okay, so when we're inside the previous day's value area, we can either sweep the current day's value or the high. Okay, so we could come up to here, but because we're moving sideways like this, what I like to do is I'll turn the session volume off, and what I'll do is I will use volume profile on here, anchor, okay, and this is the level. Price comes up, we take out the high, and then we start trading low. Again, we're pushing higher here, but my stop's up here. If we want to push up and take this high once more and then trade lower, I'll get another entry. Simple as that. And where would I like to take it to? Again, I've got this low down here, this low, and this low. So yeah, that is how I use daily bias. That is what I do for daily bias. Plus, if you've watched my previous videos, I do also use free candle patterns plus the easy gam haze, just to confirm. Like, if you looked at this right now, you would think we've got a potential swing here for this day to trade a bit lower down to the previous day low. EMAs are bearish. Okay, but again, we've got these highs that I want to see get traded to. Alright guys, so that is the video that I wanted to go over, just how I'm trading. I'm confirming I'm getting an entry on the footprint chart, but there's only 3 things that you really need. You need basically a bias. How do you get your bias? What I've just told you there is the value areas, auction market theory it is. Then you want to get your narrative. So the narrative is, how are we going to get to the area? Alright, and what we're going to use on that is we're going to use value area again when price trades outside value area, that is in premium or discount level, and we're going to use the VWAP as well for premium and discount levels. Okay, to entry I will use footprint and cumulative delta. Okay, but I'm not going to jump into that, I don't really have time for it, and I don't want to give all my secrets away. So yeah, that is the video for today. I hope you've enjoyed it. Price could come up here and take my position out here, but it's totally fine. Okay guys, so that is exactly how I get my bias. If you're looking to trade this, what I would recommend is only trade days that are obvious. Okay, when price is trading higher, when you can look back and see 2 days we've traded higher, you want to trade the 3rd day. Okay, again, when we start going sideways, consolidation, we're in a balancing phase, but you want to trade in premium or discount of that. You want to see if we get acceptance above or if we fail, and then trade the opposite way. Alright guys, have a good day.